rank and file members of the Labour Party are urging their treasurer, Jim Chalmers, to strictly and seriously consider scrapping the 50% capital gains tax discount that property investors get for holding a property for longer than 12 months and then selling it. So right now, what happens is if you buy a property for $500,000, hold it for more than 12 months, let's say it rises to $1 million, just to keep an easy example, you pay capital gains tax not on the $500,000 gained, but only half of that. And that is because there is a 50% discount on your capital gains tax. The reality is now that according to the ABS, the average dwelling price in Australia for housing has officially passed $1 million for the first time. So what you're seeing is the left, some might say the far left, including the Greens, having a tangible push and tangible effect on Australian government's policies. We are seeing a lot of people struggling, and this is why policy changes like this are being suggested. Now, in the following few minutes, I'm just going to be going through what I think about these policy changes, and of course, my opinion is not really that important, so I'll be sharing some very important statistics, and that will help you conclude at the end of the episode whether the price of housing will actually increase because of this policy change, the cancellation of the 50% capital gains tax discount, or whether house prices will fall. Same with rents. Will they increase or fall? Now, one thing I do want to say is that capital gains tax, this 50% discount, is not at the moment just for housing, not just for property investors. In fact, it's for businesses, new businesses, it's for the stock market investors as well. But this policy change is exclusively aimed towards Australian property investors. So, I mean, I'm not a observer or an expert commentator on politics itself per se, but from the get-go, it seems that property investors are being targeted, where this current policy actually applies to a whole host of investment asset classes. And that leads one to think or to believe that, is this something that is in line with capitalism, or is this now somewhat sliding towards socialism? Now, it's not me to say what is right, what is incorrect. You can make the decision yourself. But in a free market, in a place like Australia, it would be probably the first time that real socialist policies are implemented if they pick on property investors by themselves as opposed to all investment classes. And I think the other thing to mention real quick as well is that this is not actually going to achieve the outcome, or it may not actually achieve the outcome that they are trying to achieve. And so it could be a failed policy. And what is the reason for that? I just want to share a statistic right now. So right now, on average, this is according to the ABS, just 5% of existing homes sell each year. And this drops to 2 to 3% for dwellings priced above $2 million. Now, you might say, okay, let's forget the dwellings above $2 to $3 million, because those are for quote unquote rich people anyway, although that could be debated in the Sydney context, given the average price there is well above 1.5 million. But coming back to the statistic, just 5% of existing homes sell each year. Now, stick with me here. I want you to connect to these points. Now, if capital gains tax discount was removed, then wouldn't it give more of an incentive for property investors to just never sell their houses? And I'll give you a real concrete example of this overseas in a second as well. So let's say you're considering selling your house, your investment property that is, but now there is this abolition, I can't speak English right now, of this capital gains tax discount. Now you might consider, hey, instead of selling this, why not just keep this as a generational asset? Or if I was selling it to use that money, redeploy it in another asset, maybe another property or a different asset class, instead of selling it, why not take equity out instead? I'm sure you all guys know what equity is. Equity simply means when the price of your property's gone up, but the debt hasn't, the mortgage hasn't, you can actually go back to the loan, the bank, and refinance it and get equity out, which is another loan, and use that to buy another asset, or you could use it for almost whatever. So if that's the case, then that makes property in Australia less liquid. Already it's illiquid. I mean, only 5% of existing homes sell every year. So if that 5% goes down to 3% or 2% or 1%, you got to ask yourself, like, is that bringing more supply onto the market or less supply? Right? You got to ask yourself that very carefully, because if this policy backfires and now only 1% or 2% of existing homes are sold every year, then that means that potential buyers, first home buyers, which presumably is who they're trying to help in this policy change, especially Labor and Greens, who together can, if they collude, can actually get this bill passed. This actually hurts their base, but from a political positioning and advertising perspective, it helps their base because it sounds on the surface to help them. Of course, it's going to bring house prices down, but the devil is in the detail. If the less investors sell, then actually there's less supply on the market. And we all know, in fact, the Treasurer has himself said now that the Labor government's ambitious plan to build 1.2 million dwellings over a course of 5 years has failed. Like, that's recently come out in the last 3 or 4 weeks. So we know we're not getting new supply, and if existing supply also doesn't transact, then that could be a real tragedy for Australian housing. I want to share with you this statistic as well. 20% of investors sell within a year. Okay, 20% of investors sell within a year, and only 55% keep the property for 2 years. Okay, only 55% of investors keep the property for 2 years. Only a third of landlords hold their investment properties for more than 20 years. This data is from the Australian Housing and Urban Research Institute and the Curtin University. They did a research paper. So what this tells me is, you might say, PK, well, most investors, they hold their properties forever anyway. So this argument that you've just put forward to say that, housing might actually shrink, the supply might actually shrink because people will hold it for longer. Well, they're already holding it for longer, so it won't actually impact supply. But actually, check this out. 55% of investors sell within 2 years, 20% sell within 1 year. So basically half of all of investors are selling within 2 years. That's crazy, all right? And that probably tells me that all these investors are either flipping property, which isn't very easy to do in Australia. It's very cost prohibitive because there's a lot of transaction costs, or they're just really uneducated. Maybe they use buyer's agents, the property didn't do well, and therefore they just want to get rid of it. But what this also tells me is that there is a lot of upside for them property investors tweaking their strategy. Instead of being flipping, or instead of being in and out of the market so quickly, they might say, okay, I'm just going to hold this thing forever because I don't want to pay that additional capital gains tax if the 50% discount is abolished. All right. And so that proves that there is a lot of potential for supply to really shrink up. The latest ABS forecast suggests that Australia's population may increase by 470,000 people. This is new people per annum over the next 5 years. We know, Australia re-voted in Labor. Labor's immigration policy was much the same as what it was in the last year or two. So it's a big Australia policy. We want a lot of immigration according to that school of thought. That's another Perth, that quantum of people, 470K a year. That's another Perth in terms of population size over the 5-year period. So that's crazy. We not only understand that new houses aren't being built, we also understand that this new capital gains tax abolishment, the discount abolishment, this could mean that existing houses now don't come onto the market either, because there's no incentive for investors to sell. And investors make up normally about 30% of the market, so it's an addressable market that's significant. So existing properties are going to become less liquid. That means less supply in the market, which completely goes against the intended outcome of the policy in the first place, which is to reduce house prices. In fact, because there'll be less supply on the market, that could mean that house prices actually increase. Okay, because house prices are no different from any other economic phenomenon, which is to say prices are based on supply and demand. We know demand is strong, predominantly driven by immigration and wealth inequality. The richer are getting richer, and a lot of people coming in from overseas. Demand is strong, and supply is going to shrink, so prices go up. You might think about rental demand. What will happen to rental demand? Well, actually, that is something that might dissuade new investors from coming into the market. Even though house prices may go up, a lot of investors may be sentimentally, or their sentiment may change to think, okay, property investing is less favorable, so there might be less investors into the market. What that does means that there's a smaller rental pool, less rental properties available going forward. And what that in turn means, given that the immigration story is still strong, okay, what that means is that rental prices go up. And when rents go up beyond their equilibrium level, there gets to be a point where now all of a sudden, even Melbourne gives yields of 6% plus. Brisbane starts giving yields of 5-6% plus again. Maybe Sydney even goes from like 2% to 4, maybe 5% yields over the medium term. Then it makes sense for investors to come back in. So in all these situations and scenarios, you see house prices rising, but also rents not going down like the intended outcome of this policy change, but in fact rents going up. So you can see how on the intuitive level, like, yeah, this is a good policy, especially if you're a young person, you can't afford to get into the housing market. I can see how you'd vote for this, right? Why should all these rich investors get rich? Which is in fact incorrect, because they've already proven that the average investor has a household salary of less than $120,000. So that aside, but I understand the sentiment. Young Australians are doing it really tough, and they need someone to blame. But this policy is really not going to help. And I promised you an example from overseas. So right now, the suburb that I live in, or at least have one PPR in, as well as my Gold Coast one, here in Menlo Park in Silicon Valley in California. It's adjacent to this suburb called Atherton. And in the mail, from this real estate agent, they put in, the brochures, and I got this thing that said that Atherton house prices, which by the way is the richest zip code in all of America, had gone up 13% in the last 12 months. And I was like, how can that be? The economy here in the States is pretty ordinary. Like, how is it that prices have gone up so much? And then when I worked through it, I understood. In the States, all right, you have this thing called property taxes. And property taxes for, let's say, a $6, $7, $8 million house are like $100,000 USD a year, every single year, in these types of areas. So people who already own homes, they don't want to sell their homes, okay? And then that is because they have been paying property tax based on a calculation when they initially bought the home. Maybe they bought it 10 years ago, and so the property tax rate is calculated based on the purchase price, and the purchase price back then was less, so their property tax might only be $30,000 or $40,000. If they were to sell that property right now and buy the identical property for the same price, nowadays, the average median price, so they might have bought it for $5 million back then, now they have to buy it for $10 million. Their property tax jumps up from $40K, let's say, to $80K or $50K up to $100K, and no one wants to do that, right? And that's why no one sells these houses, and that's why, despite the economy, prices continue to go up. This is a good comparable point, not perfect, but to what could happen in Australia, where now there's an additional tax, you could say, because there is no capital gains tax discount. So there's an additional tax, you could say. That means that it's less advantageous to sell your property, and so people just hold those properties, and regardless of what happens with the economy, property prices keep going up. There is less liquidity in the property market, and less liquidity means higher property prices, less supply, higher property prices. I hope that's making sense, guys. I hope that's coming through. My name is PK. Let me know what your thoughts are. Hit the subscribe button, give it a like. Thanks so much.